Hello everyone and welcome to my channel. Today's video is a bit different. Many times, when I post the technical analysis or I talk about fundamental analysis, there are some people out there that, they just start criticizing fundamental analysis or technical analysis. Some say this one is rubbish, the other one say the other one is rubbish. Some say both are rubbish. Anyway, um, today I want to talk about mostly the similarities of these two main methods of analysis. When you comparing technical analysis with fundamental analysis, the first thing is look at their objectives. Both technical and fundamental analysis seek to evaluate an asset. Okay, so they're looking at company share or commodity or cryptocurrency or whatever, and they're trying to evaluate that and predict the future prices. So up to here, they have same aims. So they want to predict the future price. And in my opinion, these two major analysis methods are similar more than what you think. So let's see what I'm talking about. Fundamental analysis, the FA involves the financial analysis of an asset by focusing on the underlying factors that affect that asset. For example, for a company, they're looking at the balance sheets or earning reports, etc. The assumptions behind fundamental analysis is that the market does not always value assets correctly in the short term. So fundamental analysis try to identify the true value of an asset to buy at a discount or sell at a high. They believe their investment will pay off over the time once the market realizes the fundamental value of an asset. Okay. Now let's look at technical analysis. The technical analysis seeks to evaluate a company by using historical price and using volume data, okay, to assess where the price of a security or market will move in the future. This means technical analyzers are looking at past patterns and trends to see if they are repeatable in the future, for example. One of the most important items in TA also, as you know, is trend, which I'm a fan of trading in the direction of the trend. You know it if you look at my analysis and my educational videos about the different indicators and how trade using those indicators and using these strategies. Anyway, why do I think these two are very alike? Okay, so let's just go a bit into the detail. As a fundamental analyzer, you trying to find the true value of an asset. So you're saying, okay, I'm looking at the earning reports, for example. I'm looking at the balance sheets. Then this company is doing very well, but the price is not that good. So what happens? Just let me have a look at the chart of, for example, here you can see Ashland Global Holdings chart. So I'm just want to keep this simple. This is just the earning report. If you can see, as you can see, earning reports, and also it shows you dividends, which is not important anyway for this lesson. So to keep it simple, we're not we are not looking at different ratios. As you know, in fundamental analysis, there are many different ratios. So if we just look at earning reports here. So here you see the earnings. It surprises by 1.5, 1.54%. Okay, so the earnings was better than expected. This is a good thing. Okay, so you're saying this company's price is undervalued. I'm gonna buy it because this company is doing well. Okay, so you buying and you think the price will go up. Okay, again, next earning report is here. Another surprise, 1.03% surprise. So again, it goes up. So you're saying, okay, still good, still undervalued. I'm gonna add some more. You again buy here or add more. And next report, again, you can see 76.65% surprise, which is nice, very nice. Okay, you say, oh, I keep adding to this position, or I just keep my position open, depending on your strategy. So it's still going up. Even next report you can see is green here. Another surprise, another good report. By the time you reach to this one, then you'll see, oh, minus 20% in earnings. Not earnings, that's minus the surprise in minus 20% anyway. So if you're a fundamental trader, you're saying, okay, I found this company when its share price was undervalued over here. I had the positions open up to here. Now we see a not very good report. So I've done enough. I'm gonna just close my lying positions. And if your strategy allows you to short, many fundamental analyzers don't like going short on, for example, equities. They always go long, but some can do shorts, especially hedge traders or the uh, portfolio managers who try to beat the market. They also short the market. So here you're saying, okay, I've done enough. I'm closing or I'm going short. Okay, so here you go short or you close. Now let's have a look at this same scenario using technical analysis. Technical analysis look at this, and we had good reports. Okay, so the price also goes up. Technical analysis, what they say, just I'm going back to my website to read this first for you. So as I said, fundamental analysis tries to identify the true value of an asset. For example, for a company, the share price, for company share price, they look at the company's balance sheet, cash flow statement, earning reports, and different ratios. Okay. The technical analysis considers that there is no need to do this hard work, as a company's fundamentals, as the company's fundamentals are already accounted for in the price, and the information is reflected in the company's charts. So we need to look at charts and use indicators to find the best entry. So technical analyzers say this information will be reflected on charts anyway. So we go back to the chart. Another good earning report we had here. But technical analysis says, okay, I can see a channel here. For example, this is just one of the technical analysis I'm talking about. So they're saying, okay, we're just moving inside this channel. And at the same time, you can see the reports coming good. one after another. A technical analyzer may exit the trade here because it just breaks, through the channel. And again, they may consider entering the market by using, for example, a Fibonacci. These are just examples and not exact. Sorry. Oops, I'm using another one. For example, here, or I'm deleting that one. Sorry, these sometimes they displays. Okay, I'm putting another one. Sorry. So I'm here to. Oh no. Don't have a mouse, and sometimes working. Okay, then you using anyway, you adding the you're adding the Fibonacci, for example, numbers here from the bottom to the top, from here to here, and you say, okay, this is looks like, that's embarrassing a bit, but anyway. This is looks like a good point to go long again here. So this could be, for example, one of the Fibonacci numbers, for example, 28% something. Then you go up and you add to your trades. But this is not what we've been trying to say. So you're looking at the earnings again. This earning, this earning, this earning is still green, okay? And technical analysis also looks at the Fibonacci, for example, here, and they find a good entry. They say, okay, the overall trend is up. I'm going to enter again. They enter here and just keep the position open. Again, they find another uptrend here and they just keep the position open. So as you can see, the price movement here is following or matching the underlying reports, earning reports that we have. Again, here you can see the price will go below the channel, for example, and the technical analyzer says, okay, I've done enough. I'm going to close the position. And after that, also they see a double top here. So they see a double top here, one top, and then they say, okay, it's a good sign of reversal. They go short here. And then they keep following this trend. And as we can see, two bad earnings, and we have the downtrend anyway here. It's not always the case, but I'm just saying that technical analysis says, okay, these bad reports will be reflected on the chart. So we look at the chart. We don't need to go and look at the company's report, for example, or if this is an oil price, we don't have to just read the news that much and see where is war and what happened, what's happening in the world. Anyway, what I do for my trading is different. I do both. I read the news, I follow the news, I try to find for example, undervalue markets. Then I use my technical indicators to find the best entry points. So if you can combine fundamental with technical, that would be very nice, and it's an advantage if you learn technical analysis and also you have time to do the fundamental analysis. Then you combine these two together and you find the best entry points. As you can see, these two different analysis methods are very similar. At the end, the approach is different, but if you go to the base, you can see, yes, that there is a reason for the technical analysis, and there is a reason for the movement in the pattern. So yep, that was all about the technical analysis and fundamental analysis. Sorry about these glitches in my application and using this because I don't use mouse today, and this was the first time without the mouse, and with just a pen it's not as smooth as I thought. Okay, that was all for today. Have a nice day. I hope you learned something and you can have many profitable trades in future. Have a nice day. See you later.